Hello and good afternoon everyone. This is Shaurya from Market Times TV, and now we will discuss what's going on in the international financial markets and what are the factors behind it which move the markets. Well, there are two factors which are moving the market so much right now. One is positive developments on US-China trade talks, and second, Boris Johnson winning with a clear majority in the elections. Well, before we discuss on these factors, let's have a look at how markets are performing right now, and let's have a look at the price updates right now. So, if we start with the Indian markets, then Indian markets having a great run, as Sensex and Nifty both are trading with quite positive. Sensex is in fact up by 336 points at 40,917. While if we talk about Nifty, then Nifty is up by 84 points and it is up at 12,057. So we are seeing quite a good run in not just the broader index. While if you look at the mid cap index, then in mid cap, Nifty mid cap is up by 16,887 points and it is up by 117 points. While if you talk about BSE Sensex mid cap, then it is also up by almost 100 points at 14,794. So we are seeing all these positive impacts. While if you look at the indexes, then all the indexes are trading quite great, as Bank index is up by 0.98%, FMCG is up by 0.29%, while if we talk about Nifty IT, it is also trading in quite positive with a gain of 0.91%. And if we move to metal stocks and commodities stock, then same trend is being observed, as Nifty metal is going on a run. Nifty metal index is up by 181.88% because positive development from international front is impacting the metal stocks in Indian markets. While at the same time, even Nifty Realty, Nifty Media, all the indices today are trading in green. In fact, not even a single index only Nifty Pharma is the index which is trading in red. It is down by 0.7%. Beside this, all the index in Indian markets today are trading in green, which shows such a high positivity from the international factors. And interestingly, it is at the time when domestic news is completely opposite. We got two domestic news on front of inflation data and also from industrial production. They were not positive. We will discuss about them in detail later on, but right now the main point is market is putting more attention to international news and also what will happen in the future and not how the things are right now. Hence, it's clearly that market is forward looking and things from here seems quite positive to the market everywhere. And it's not just the Indian markets. In fact, if we move to international markets, then same trend is being observed. European markets are looking to set higher and Asian markets today have a good run. Nikkei was up by almost 600 points at 24,023, while Shanghai market is up by 53 points. Market of Hong Kong was also up by 613 points. We can see that today all round we are seeing quite a good developments, and same trend is being observed in commodities market as oil prices are up. Brent is trading above 64.68, while WTI is trying to get closer and closer to 60 at 59.52. And if we move to bond markets, then bond prices are also high, as yields on 10-year US government bond is at 1.915%. So all this indicate one thing, that risk appetite is very high and market is not looking to have any kind of safe haven buying. Because if we look at the index and currencies, then rupee is trading with such a great run. Right now, rupee is at 70.7 with a gain, and if we talk about other commodities and other currencies, then it's pound and sterling, which is the biggest currency right now. And right now, pound is up by 2% against the dollar, and pound is also gaining in fact against the other currencies like euro and all. So major reason for gain in pound is the way Boris Johnson has won the elections. And if we are talking about markets, and we can see that there is positivity all around the globe, from Asia, America, Europe. One thing is clear, these two front, US-China trade war and Brexit deal, Getting clarity on these two things have removed a huge curtain of uncertainty from across the global trading scenario, and that is being reflected in the markets. So now let's discuss them in detail. Well, let's first start with the biggest news, and that is US-China trade war. Well, it seems finally the much awaited US-China trade deal is happening, and that has sent the stock market skyrocketing. All this began with a tweet from Donald Trump where he stated, "Getting very close to a big deal with China. They want it and so do we." Then it was reported by Bloomberg that the deal between US and China is finalized and Donald Trump has in fact signed the deal. Although the discussion can to be made it official will be done later today. And as a part of the deal, US won't impose tariff on $160 billion goods on 15 December, and it may also lead to reduction in existing tariff. At the same time, China has agreed to buy additional agriculture products from US for the amount of $50 billion. And it was reported that US negotiators offered reducing tariffs on goods worth $350 billion by 50%. However, it was reported by Reuters that if the deal between those two countries won't happen, it can be a catastrophic. And at the same time, it is also being added that the deal happening right now is very limited considering what was discussed initially in the October. So in that sense, it can be a disappointment, but still there is a deal in the market, and that is a bigger news. And it's a relief for market and policymakers across the globe because trade war has created denting effect and not just two countries but on whole global economy. It is being speculated that if US would have imposed new tariff on 15 December, then things between the two countries would have taken a turn for worse, where China would have imposed additional tariffs on the US goods. And as per the sources, China would have imposed goods on agriculture products like corn and wheat, and it would have also reapplied 25% tariff on US vehicles, while 5% tariff on US auto parts would have also been applied. Now this seems this won't happen and things are finally getting resolved for some time. This is the biggest bullish factors for global markets, and currently, even though a bare minimum, it has prevented the worst case scenario, and that is what's enough for the market right now. It's established fact that the difference between the two countries is likely to stay for some time, but given the progress, business sentiment may start improving, and which might be enough to trigger revival in the economy. And if economy starts reviving, so after a time when things again start escalating between US and China, suppose it did, then markets, economies and all the countries will be in much better condition to face it. And that's why they're reviving, because they have got some time to breathe and be prepared for the next wave of attacks on each other. So now, after we are done with US-China trade talks, let's move to the second biggest factors, and that is UK elections. Well, in UK elections, it is clear that Boris Johnson is heading for a huge victory, and that has sent sterling 2% against the dollar. In fact, sterling is at record year highs against various currencies right now, and this was such a huge event that whole Brexit was dependent on it. Boris Johnson made his whole campaign on the ground of getting Brexit done, and his clear stance seemed to have paid off. In an exit poll, it was reported that Boris Johnson will win 368 seats, where 320 seats will give majority. And now, Boris Johnson's party Conservative has already won 353 seats, and still counting is left in many seats. Hence, there is scope for him to win more seats. This means clear majority for the party. And experts believe that due to huge wins, the voice of hardline Brexiters who want Brexit without any deal, which would have been a catastrophic for the market, will get less attention. And at the same time, the deal he gets from EU will have much easier path for clearance from Parliament, and possibly it will be done by 31st January. Well, it was also reported by Boris Johnson that he may add the transition period of Brexit, so it will give him enough time to the businesses to adjust with the new dynamics. And if Brexit gets done by 31st January, then UK and EU will have enough time to discuss how the things will happen out in the future course of relationship. And it was being factored in by the market that Boris Johnson will win, but by this big margin, well, that is something come as a positive surprise. And this will help him. However, one thing to be noted here is now it seems there won't be any issue of hung parliament, and as a result, that's why we are seeing sterling going up to 1.34 against dollar. During September, when Boris Johnson lost majority in parliament, the pound has lost its ground and it fell to 1.2 per against dollar. But now, after 17th October, Boris Johnson got some deal from Europe, the pound started recovering, and now pound is seeing even more highs. Well, it is still far away from its record time high, which was at the time when Brexit referendum was happening and market factored there won't be any deal. At that time, pound was around 1.5 against dollar. But then after the referendum, it has fallen, but still it's going quite good today. And even all the main thing is, after Brexit, this election, Brexit will be easier to get ahead, and as and when Brexit will move, the talks between Europe and UK will have much clarity, because you know one thing, anything that is being finalized between it and UK will get passed from the parliament, so the veil of uncertainty has been brought down. Although it's still a long way from here, but at least it's a progress, and after stalling for almost more than 3 years, this brings some clarity in the market, and which can also prevent UK economy from falling further in the period of slowdown, because right now the condition of UK economy is not great at all. It has faced a lot of problems. If we talk about UK problem, its economy is going very bad, and now it is clear that situations can improve. This means UK won't go into recession, and if UK prevents its recession, then it's a huge center of global economy. So good for UK will get spillover effect across the economy, which can lead to the again revival in the global economic scenario. Now, if we talk about global economic situation, then as we know, recently that Fed has not made any changes to the it hasn't not just kept the interest rate at the same point, but at the same thing they have also made the projections of economy completely same. Like Fed believes that GDP of US will remain at 1.9%, while jobless rate will stay at 4.1%, and now it is expected that even next year they won't bring any change in the rates. For one, economy seems to be stable, and for second reason, due to elections next year, Fed like to stick to the sidelines. And if we move to recent economic data, then this week it is dominated by inflation rate. India's inflation, China's inflation, European inflation, and US inflation. We got data from inflation everywhere. Inflation from China was however quite high, and it surprised the market in a negative way. But if we move to European inflation, that things seem to be according to the target, as inflation of Germany fell by 0.8% month on month, and which is in line with expectations, while CPI of France witnessed a fall of 0.1%. And if we talk about industrial production of Europe, then industrial production of Europe fell by 0.5% on month compared to 0.1% last time. Indian CPI went above expectations, and inflation of India came at 5.4%, while industrial index production of India came at 3.8% negative. This means industrial production in India for the month of October has fallen by 3.8%. And although the only positive point is that it's less than the fall it has last time of 4.62%. And if we move to America, then producer price index in America has remained unchanged. So looking at the economy right now, it seems that economy is still in the trenches as inflation rate is falling, but some indicators have suggested that it may have started reviving, as value of PMI is now improving, and now it seems that as there is certainty on political front, things may take turn for better. During next year, looking at the current political environment, it can be said that economy may start to revive. And now, if we move to Indian markets, we told you that Indian markets are following global cues, while Indian data that is presented right now is not at all good, as IIP of India has fallen by 3.8% in October as compared to 4.3% in October. But the point is, its fall is at slower pace. Moreover, there are being indications that things might improve ahead. But right now, things from the current data doesn't point to that case, as IIP gives quite a good idea how production is going in the economy and manufacturing. And if you look at manufacturing output, which comprise 75% of total index in IIP, and that has contracted by 2.1%, as compared to 3.9% last time. While if we look at the other data from IIP, it shows that capital goods has fallen more than last time. It has fallen to 21.9%, while last time it was 20.7% in September. Production of electricity saw a massive fall. In September, production of electricity fell by just 2.6%, but in month of October, it has fell to 12.2%. And that is a third straight month where IIP has shown negative growth. Now, if you look at the consumer durable and non-durable goods, they also fell more than expected. Still, markets have not reacted negatively because it's the month of October. And it's when the October we have started seeing revival in the consumption, and as production follow consumption. So it is being expected that in the month of November, production data will show some revival. And green shoots can come, like if we saw airline passenger traffic, then it is reported that this time airline passenger traffic went up by 11%. So that is one of a good news. While if we talk about brokerage house JP Morgan, it believes that for time ahead, intermediate goods production has increased, auto production has increased, so along with government measures, the economy may start to revive finally. Even though auto sector seems to have bottomed out, so there can be a good indication. But right now, nothing can be said with certainty, and to whether actually conclude that Indian economy has finally come out of trenches and it's moving ahead, we have to look again at the production data of November, and possibly things may start moving from December or next year. But right now, well, at the max we can say let's just wait and watch and hope all the government measures and all the other things will work in the favor of India. And if we look at inflation data, that inflation of India has breached the target and it has breached the expectations also, and it came at 5.54%, while last time it was 4.62%. And major culprit for such a huge increase in inflation is food inflation, as prices of food increased 10.1%, in fact 10.01% as compared to 7.89% last time. Inflation of cereals came at 3.71% as compared to 2.16% last time. Vegetable inflation has increased to 36% compared to 26% last time. And since food inflation comprises almost 50% of total basket, hence inflation rose so high. At the same time, core inflation, which excludes food and oil, remained at 3.5% and it remained unchanged, which showed that demand across the board has remained low, while it's just food inflation from the supply side that is impacting the inflation right now. And brokerages house have also given their comment on inflation. Like if we talk about Credit Suisse, it has said that in December the inflation may increase to 6.8%, and most of the increase is due to food, specifically onion, garlic and pulses. While Morgan Stanley believes that rise in the food inflation can take December inflation above 6%. Hence, they feel there is very low probability that RBI will reduce their interest rate in the next meeting. While if we talk about Nomura feel that supply side concerns has led to increase in the prices, and therefore they feel things might remain like this even for next year. Like they believe even the fourth quarter of financial year 2020. This means from January to March things can remain like that, and after that prices may start cooling in the next financial year. So it seems, according to brokerages house and analysts, that things may start improving ahead. But right now we need much more data to conclusively say that things have actually started improving. Stock market is moving ahead on expectations, but how much those expectations will actually lead and get realized, well, that is something needs to be observed. So that's it for right now. If you like the video, then click on like button. Don't forget to subscribe the channel, and for more videos like this on commodities and stock market, stay with Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।